Welcome back to the ALH Properties YouTube channel. My name is Zayed, and I lead the off-plan department here at ALH. I've been working in the Dubai real estate market for over several years now. And one thing I have learned very quickly is that staying up to date with what's happening in the market isn't optional, especially when you have clients relying on you to give them the right advice. There's a lot happening in Dubai real estate right now, and there is also a lot of noise. You've probably seen headlines, social media posts, and people asking the same question. Is Dubai real estate actually crashing? So today, we're going to look at what's really happening in the market, what the latest numbers are telling us, and more importantly, what this means if you are looking to buy, sell, or invest in Dubai. But before we get into it, make sure you like this video, subscribe to ALH Properties channel. We'll be bringing you regular market updates, property insights, and everything you need to know about Dubai and UAE real estate market. The headlines are confusing. Some reports point to falling transaction volumes, lower rents, and double digits price declines. Others show developers launching new projects and selling out, strong off-plan demand, and continued strength in prime villas and luxury homes. Here's the thing. They are describing different layers of the same market. Dubai real estate isn't moving as one single market anymore. It's fractured into segments, and each one is telling a different story. In this video, I am breaking down how the conflict affected Dubai, how hard the secondary market was hit, which areas stood the most, what developers actually did during the conflict, and most importantly, where things stand now and where it's going. So let's get into it. Let's start with the hard numbers, because this is where the crash narrative comes from. Let's look at the off-plan market transaction volume and transaction value. As we can see here on the table, Q1 versus Q2 2026, we see the transaction volume decreased by 16%, from 32,000 transactions to almost 27,000 transactions, and the value declined from 104 billion to 63.7 billion. That's a decline of 39.2%. Now let's talk about the secondary property market. The secondary property market, we see a decline in transactions by almost 33%, from 12,000 transactions to 8,000 transactions, and 39% decline in the transaction value from 34.4 billion to 21 billion dirhams. The takeaway here is simple. Q2 was rough, and the secondary market took the harder hit. Nearly a third of transactions disappeared quarter on quarter. But this is where most people stop looking. The real story is what happened next. What happened on the ground? The market got less liquid, buyers took longer to commit, sellers faced more negotiations, owners who could afford to wait waited, owners who needed to sell because of financing, personal circumstances, or other obligations had to compete for a shrinking pool of buyers. Which specific areas felt it most? Average transaction price per square foot before the conflict in February versus during the conflict in March. Here's the chart for villas' average price per square foot, ranked from least affected. In this chart, you can clearly see the rank, area, the price per square foot before February 26, during March 26, and the price change per square foot and the percentage of change. That was for villas. Now let's look at apartments. The average price per square foot ranked from least affected to most affected. As we can see on the table, Emirates Hills and District 1 in MBR City were the least affected by less than 2%, where we can see more effect on Dubai Hills Estate by almost 11%. Looking at the apartments, we see JLT down by 4%, Dubai South almost 5.5%, Business Bay 6.5%, and Dubai Creek Harbour almost 9% decline. The important lesson here: quality and establishment offer real protection. Emirates Hills and District 1, two of Dubai's most established high-end villa enclaves, barely moved down under 2%. The data backs up a simple idea. The strongest, most established addresses tend to hold their value best during downturn. So we talked about the downturn. Now we talk about the turn and sign of recovery in June, July, and August. This is the part most coverage misses, and it's the part that matters the most if you are deciding what to do next. The June rebound. Ready home sales jumped approximately 47% in June. That doesn't erase the Q2 decline, but it's the first clear signal that buyers were coming back once prices became more realistic. And the secondary market was not dying. It was repricing and getting more selective. We look at the table here, June versus July 2026. We see an increase in the transactions volume by 3.6% and increase in the value by almost 9%. Activity is clearly picking up. Transactions are up, but the total sales value is slightly down, meaning the average deal size is smaller. More people are buying, not necessarily at higher prices. That's a healthy signal, improving liquidity and participation rather than a price surge. It's the kind of recovery you want. Broad-based and sustainable, not a speculative spike. Let's move on the next part. How developers responded and why it worked. This is one of the clearest signs of underlying market strength. How developers behaved under pressure. Developers didn't retreat. Instead, they adapted. New launches were fewer in number and more selective, focused on stronger locations. Payment plans became more flexible. Developers stepped up incentives, just like DLD waivers, guaranteed ROI packages, and discounts for full cash deals. And we also noticed buyers were mostly residents rather than overseas investors, a sign of local confidence in the UAE market. This is exactly why off-plan activity held up better than the secondary market during the roughest stretch. Developers had the tools and the confidence to keep the market moving even under pressure. You might be wondering where things stand now. By June, the market was clearly stabilizing. Developers got more disciplined, more selective with launches, pricing, and payment structures. The market started rewarding quality over quantity. Established developers and stronger projects pulled ahead of undifferentiated supply. The names that kept coming up, Emaar, Aldar, Dubai Holdings, Damak, Imtiaz, and Ellington, aren't just recognizable brands. Buyers gravitate toward them because of track record, delivery history, construction quality, financing strength, and how well they manage a project after handover, all of which affect the resale liquidity down the line. But here's the bigger picture and why this is actually good news. Here's the part that should give you real perspective, not just data. Dubai has been through downturns before, and the recovery patterns tells its own story. After the 2008 crisis, recovery took roughly 5 years. After the 2020 COVID decline, recovery took roughly 2 years. Each cycle, Dubai has bounced back faster than the one before. That is not a coincidence. It reflects a market that is matured, deeper regulation, more diversified buyer demand, stronger developers, and a government track record of stepping in to support confidence when it's needed. This cycle already looks different from those two. We are only months out from the shock, and we already seeing transaction volumes coming back up, developers actively adapting rather than freezing, a market repricing rationally instead of collapsing. That's not a pattern of market in crisis. That's the pattern of market correcting and recalibrating, which is very different and much healthier thing. Now, the real lesson is the market isn't crashing, it's resetting. And every signal from June through August points towards it finding its balance faster than it has in the past cycles. If you are thinking long-term, that's exactly the kind of market where informed buyers do well. So, is Dubai real estate market still worth it? Everyone asking me this question, and I'll be straight with you. The easy money in Dubai is gone. If you buy the wrong developer, the wrong project, the wrong floor, you won't get the returns you are looking for. But if you choose the right project, you will get returns better than almost anywhere in the world. That's really the bottom line when it comes to Dubai real estate right now. And that brings us to the end of today's market update. Hopefully, this has given you a clearer picture of what's actually happening in Dubai real estate, rather than just relying on headlines or speculation online. The Dubai market is constantly changing, and whether you are looking to buy your first property, invest, sell an existing property, or simply understand where the market is heading, having the right information can make a big difference. If you found this video useful, make sure you like this video, subscribe to ALH Properties channel, and turn on the notification so you don't miss our next video. And if you have a question about market or a specific area or property you are considering, drop it in the comments below. I am Zaid from ALH Properties. Thank you for watching, and I'll see you in the next one.